Let's begin with US, where after raising doubts on US Treasury Secretary Janet Yellen's G7 deal to impose a global minimum corporate tax and allow more countries to tax big MNCs, several top US Senate Republicans they have rejected the deal. This is raising questions about the ability of world's largest economy to implement a broader global agreement. Now, the opposition from Republicans may push President Joe Biden to attempt to use budget procedures to pass initiatives with only Democratic votes. The development left lawyers and tax experts in Washington wondering whether it could get done without crafting a new international treaty which requires approval by a two-thirds majority in evenly split 100-member Senate. Earlier on the weekend, in the landmark agreement, G7 finance ministers agreed to pursue a global minimum tax rate of at least 15% and to allow market countries to tax up to 20% of excess profits above a 10% margin of around 100 large high-profit firms. In exchange, G7 countries they have agreed to end digital services taxes, but timing for that is dependent on new rules being implemented. The deal could pave the way for broader buy-in by G20 countries and some 140 economies participating in global negotiations over how to tax large tech firms such as Alphabet's Google, Facebook, Amazon and Apple. All are expected to be included in the new broader mechanism, which is targeted for a final global agreement in October. US participation in some global treaties has been hampered by domestic partisan divides, in which a president approves the deals, but they are not ratified by Congress. WION now available in your country. Download the app and get all the news on the move.